All right, happy ECB day. Time to get going. Okay, I was going to build it up, but let's go. Hang on a second. Hang on. Yeah, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Where's the thing? Hang on, I got too many pages open. What is this? Get rid of that. What is this over here? Hello! My name is Wayne McDonald. Looks like I got to move this over there. So much going on. So much wonderfulness in our lives. Okay, so I'm over here. All right, good morning, everybody. My name is Wayne. I'm a currency trader. I preach to teach because some of you never had this. So please ask questions, get involved. Let's have a fun day today. Today is ECB. They're going to spend an hour telling us that they're not going to do anything or make any changes. You know, I don't know. I could probably do that in less than an hour. But what is the real issue today? The real issue, and we talked about this yesterday, sort of in the fundamental part of our discussion, they're doing everything they can to weaken the euro, and the euro goes up. And it has to do with the stupid Fed, Jay Powell. Right? I think if you put Christine Lagarde and Jay Powell in a room with knives, Christine Lagarde's coming out. Only one person leaves the room, she wins. I think she could kick Jay Powell's butt. But, and anyways, whatever. So, so they have to address this problem where they're doing everything they possibly can to weaken the euro, and the euro gains strength. So that kind of sucks, especially if you're spending trillions of euros and the stupid thing still goes up. So we'll have to address that today, but mainly I think we're just going to sit back and drink coffee and tell each other how smart and wonderful we are, and that'll be that. Today is Thursday. It's my favorite day of the week because we also get to do the live trading group this afternoon. So if you're interested in joining the live trading group, and in fact, we focus on not just fundamentals, but also swing trading, setting up trades of 100 to 300 pips each for next week. We do that days in advance, so we set up our trades days in advance. If you're interested in joining that group, you have to join fxbootcamp.com first. What else is going on? Well, if you need resources, I wrote a book 10 years ago. The link is in the description below. If you like my chart templates, the link to that is in the description below. If you need a Forex broker, Traders Way is our sponsor. They're a foreign exchange broker. They execute your trades. They actually put your trades in the interbanking system. They have an ECN account for you. They have the variable spread account. They have a fixed spread account. They have MT4 for you, MT5 for you, C-Trader for you, social networking trading platforms, so everything. It's all over there. But here's the interesting thing. Before they even have established a relationship with you, they're investing into your education because they want you to succeed. So when you eventually choose a broker or what I call an execution partner for your trading business, think about that kind of relationship. Maybe you want that kind of business partner on your team. Tradersway.com. Thank you, Tradersway.com. What else is going on in the world? I think that's about it. Jackie says cigar or coffee. I'm like this close busting out a cigar, but then I'm like, well, we have one Sunday and stuff. So, man, I got so much going on. But anyways, let's just get on with it, huh? So we got ECB coming out. Cool, huh? Let's tile this vertically. Yeah. So we'll wait for that to come out in 12 minutes and 30 seconds. Let's do a quick trip around the world, see what's up. Sup? Sup, man? What's up? Let's try the indices. Okay, Euro strong. Ha 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 ha. How would you like to spend trillions to get an outcome and it does the opposite? You're like, dude, we could have not spent trillions and got the same result. That's funny, right? So yeah, so Solado says they won't change, but the interesting thing is you have to filter all that out. We already know that, right? What we are interested in is Christine Lagarde even going to talk about the strong euro or the Fed or hint about other policies? Like, what are they going to do about the strong euro? If they're trying to weaken the euro and they have a strong euro, what are they going to do about it? And that's what we're most interested in, is hints about the future. Because everything, I mean, dude, I told you a long time ago euro would go up and why. Okay? Despite them doing everything that they're doing. Everything they're doing is to weaken it. Yeah. Ain't going to happen. Okay? Right now I look at the world. Japanese yen super weak. I love it. US dollar index super weak. I love it. That's all good for me. Hopefully it's good for you. Aussie way up. Euro way up. Kiwi, CAD, and pound. So I don't really want to buy pound. I don't really, CAD sort of still, like, it was nice that dip we had in oil. Kiwi's okay. Swissy's going the wrong way, so that's a big question mark. So notice that Aussie is sort of like, and the CAD and the Kiwi, they're like, okay, commodity currencies are trying to play well. Euro is straight up, but I think that just has to do with US dollar. Isn't that funny? I think there's a consequence of the dollar weakness. Like, it's not 1-for-1 correlation, right? It's probably 0.7 correlation is what I'm guessing. Negatively correlated, right? Right? So that's interesting, but I think a lot of this has to do with simply the US dollar. So we could take a look at how the dollar's doing. How you doing? Okay? The dollar's super weak, but the pig is even weaker. All right, you relative strength traders, that creates scalping opportunities, right? Not on the dollar, but just the pound. So how about pound Swissy? Why pound Swissy? Swissy strong. So let's take a look at Pissy. Pissy, right here. Pissy, pound Swissy. Le flétulement. We're through the extremity. Yeah, we're through the extremity. And you're like, oh my God, wait, there's so many colors. Okay, whatever. Let's do it this way then. Let's simplify. Well, that's not going to be that helpful. That's next week. So let's maybe day trade it down. Okay. So if you were a day trader, there was a trade yesterday at kicking off the 21. There is a New York close front run, like an Asia front run. There was a London Open front run. There's your sell zone. We're through the profit target. And maybe there'll be a bounce tomorrow. New life. Come on, dude. Seriously, let's think about this. So sometimes I don't know if you guys are heckling me or if you just log in and you're like, hey, man, I'm not here, but I want to know something. I just showed you that the pound is ridiculously weak. And the dollar is ridiculously weak. Do you understand that, New Life? So what do you mean, what about it? There's nothing. There's not even about. What do you mean, what? Okay? So, come on. Okay? Come on, think about it. Okay, so we're on something very weak and we're on something very strong. So now maybe this is tomorrow's play. I'm more interested in tomorrow now, right? Because remember, so yesterday we were in this zone. And so if you were bearish on this, you'd be kicking it off the 21, kicking it off the 21. And tomorrow now, you'd be doing the same thing, planning, like today you'd be, oh, where's my better color? I gotta unlock this thing. Anyways, so now you're thinking like this, right? So like what's happening now, being down here, nothing. You either sold it up here, like look at the trade plan. This is day trading, by the way, right? This is simply day trading. It's shorter term. You're making a trade of the day. Okay. How many people here have completed my day trading course? And we talk about the Asian fade. We talk about the London boys. We talk about the trade of the day, right? Oh, you just finished at FT9. Cool. Right? So like the basics of it is this. Like, there you go, right? I mean, you got to understand why. Cool. Marina, you did too? Really? I don't think I knew that, Marina. Grumpy's like, not yet. Yeah, so we're talking about like Asia fades. We're talking about the London boys right in here. There's the trade of the day. So this is set all bearish. Right on, Marina. So anyways, I mean, it's a bit of backfilling in the sense, like, I don't think you would have known to do this, but the technique fits if that's what you were looking to do, right? You see what I mean? Like, I always want to make it clear, these charts don't tell you what to do, but if you're farting around with pound Swissy as a bear, you would have done that. It's different, right? It's the same thing, only different, right? So you always have to think about it that way, guys. Remember, I ended yesterday's webinar saying, what are you going to do tomorrow? You need to be planning this now. What are you going to do? We have big moves across the board. Everything I wanted to go up went up. So what are you going to do next? What are you going to do next? What are you going to do next? Not now. I didn't say what are you going to do now, because they moved. So you were already long on the up. So, but if it's moved up, what is the consequence of you seeing and acknowledging that let's say bullish candle in a bearish world, right? What is your follow-up to that? What is your response to the change in market conditions? And it's the same sort of thing, like if your response yesterday was you watched all this and you're like, well, that's perfect because it takes me up to the 21 and I'm going to front run it off yesterday or tomorrow's, the future sell zone, because yesterday this was the future, right? That's what you would have been doing, right? Pretty standard. And now you're down here. What should you do, right? And then someone else logs into the webinar today like, hey, what's going on? Should I be selling the pound Swissy? No, you should be thinking about what you do tomorrow if you got the opportunity. Big difference, right? What would you do here when you're here? Now, you might say if you sold here, and then you're here, what are you going to do? Well, if it rises, you're going to think about selling it in the sell zone because that's simply a day trade plan. Okay? What happened was the market was missing, and then the market returned and took it farther. So the swing overrode the day, but then, right, so this day you didn't get that type of trade, but this day you did. And so again, we don't know tomorrow, but if you're a bear and it does this, then game on, right? You see what I mean? It's always if-then statement, if-then statement, if-then statement, if-then statement. So, yeah, so don't look at this or listen to me and say, Wayne says I should have been on that. That's not true. But if you were trading it and analyzing it and using proper, let's say, rules of engagement, then yeah, then you should have caught it. But it's because that's what you had intended to do. If you have no intention, you will not be successful. You have to have an intention. And it doesn't matter if we're talking about a day, a daily candle or a 5-minute candle. You have to know what you want to do before you do it. Okay? Cool. So this is a little danger. Okay. See, I'm plotting things, huh? That's all, plotting, looking at the time of day, time of day, time of day. Like, think about it like down all day. Then we hit this little New York Open, profit taking. Then the next day, down all day. Then the New York Open, profit taking. And then the next day, up all day, New York Open, profit taking. Right on, Grumpy Cat. Oh, the guard's wearing a mask. Cool. All right. Cool. You guys excited? I am. ECB. Live coverage of the ECB press conference. What is she going to do? What is she going to say? I'll translate it for you.
Break during the summer, and certainly the Governing Council members are all back and in action. Very delighted to be together today and to have those good discussions that I will evoke now together with the Vice President.
The weird thing is I have the exact same suit.
Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the Commission Executive Vice President, Mr. Dombrovski. The incoming data since our last monetary policy meeting in July suggests a strong rebound in activity, broadly in line with previous expectations, although the level of activity remains well below the levels prevailing before the coronavirus pandemic. While activity in the manufacturing sector has continued to improve, momentum in the services sector has slowed somewhat recently. The strength of the recovery remains surrounded by significant uncertainty as it continues to be highly dependent on the future evolution of the pandemic and the success of containment policies. Euro area domestic demand has recorded a significant recovery from low levels, although elevated uncertainty about the economic outlook continues to weigh on consumer spending and business investment. Headline inflation is being dampened by low energy prices and weak price pressures.
We can't get
in the
inflation.
context of subdued demand and significant labor market slack. Against this background, ample monetary stimulus remains necessary to support the economic recovery and to safeguard medium-term price stability. Therefore, we decided to reconfirm our accommodative monetary policy stance. We will keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to but below 2% within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamics. We will continue our purchases under the Pandemic Emergency Purchase Programme, PEP, with a total envelope of 1,350 billion euros.
Oh, that's a
These
lot of
purchases
euro.
contribute to easing the overall monetary policy stance, thereby helping to offset the downward impact of the pandemic on the projected path of inflation. The purchases will continue to be conducted in a flexible manner over time across asset classes and among jurisdictions. This allows us to effectively stave off the risk of the smooth transmission of monetary policy. We will conduct net asset purchases under the PEP until at least the end of June 2021, and in any case, until the Governing Council judges that the coronavirus crisis phase is over. We will reinvest the principal payments from maturing securities purchased under the PEP until at least the end of 2022. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference securities with the appropriate under the monetary policy stance until at least the end of 2022. Net purchases. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance. Net purchases under our asset purchase program
How cool is
will
that?
continue at a monthly pace of 20 billion
Guest speaker
euros,
today, y'all.
together with the purchases under the additional 120 billion euros temporary envelope until the end of the year. We continue to expect monthly net asset purchases under the APP to run for as long as necessary to reinforce the accommodative impact of our policy rates. We intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended
You hear no sound now?
time
Oh.
past the date when we start raising the key ECB interest rates, and in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. Also continue to provide ample liquidity through our refinancing operations. In particular, the latest operation in the third series of targeted long-term refinancing operation, TLTRO 3, has registered a very high take-up of funds supporting bank lending to firms and to households. The monetary policy measures that we have taken since early March are providing crucial support to underpin the recovery of the euro area and to safeguard medium-term price stability. In particular, they support liquidity and funding conditions in the economy, help to sustain the flow of credit to households and firms, and contribute to maintaining favorable financing conditions for all sectors and jurisdictions. At the same time, in the current environment of elevated
Look
uncertainty,
at our line yesterday on the Aussie
the
dollar.
Governing Council will carefully
Remember that? I made a
assess
big deal about that.
incoming
Awesome.
information, including developments in the exchange rate with regard to its implications for the medium-term inflation outlook. It continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Let me now explain our assessment in greater detail, starting with the
Remember, if
economic
you're
analysis.
scalping the volatility, don't risk a
Euro
lot.
area real GDP contracted by 11.8% quarter on quarter.
Do like a
in the second
1030
quarter of
OCO
2020.
or 1530 OCO.
Incoming data and survey results indicate a continued recovery of the euro area economy and point to a strong rebound in GDP growth in the third quarter. Alongside a significant rebound in industrial and services production, there are signs of a notable recovery in consumption. Recently, momentum has slowed in the services sector compared with the manufacturing sector, which is also visible in survey results for August. The increases in coronavirus infection rates during the summer months constitute headwinds to the short-term outlook. Looking ahead, a further sustained recovery remains highly dependent on the evolution of the pandemic and the success of containment measures. While the uncertainty related to the evolution of the pandemic will likely dampen the strength of the recovery in the labour market and in consumption and investment, the euro area economy should be supported by favourable financing conditions, an expansionary fiscal stance, and a strengthening in global activity.
By the way, a friend of mine just financed the purchase of a corporation for
Is broadly reflected in
1.8%.
the September 2020 ECB staff macroeconomic projection
Wow,
for the
huh?
euro area. These projections foresee annual real GDP growth at -8% in 2020, plus 5% in 2021.
So if you're an American and
plus
you're looking for
3.2% in
project
2022.
financing, I could hook you up, man.
Compared with the June 2020 Eurosystem staff macroeconomic projections, the outlook for real GDP growth has been revised up for 2020 and is largely unchanged for 2021 and 2022. Given the exceptional uncertainty currently surrounding the outlook, the projections include two alternative scenarios, which we will publish on our website following this press conference. Overall, the balance of risks to the euro area growth outlook is seen to remain on the downside. This assessment largely reflects the still uncertain economic and financial implications of the pandemic. According to Eurostat's flash estimate, euro area annual HICP inflation decreased by -0.2% in August from +0.4% in July. On the basis of current and future prices for oil, and taking into account the temporary reduction in the German VAT rate, headline inflation is likely to remain negative over the coming months, before turning positive
No
again
way.
in early 2021.
That's
in
not
the
good,
near-term,
Haas.
price pressures will remain subdued owing to weak demand, lower wage pressures, and the appreciation of the euro exchange rate, despite some upward price pressures related to supply constraints. Over the medium term,
the question is,
in
why
demand,
only in America can I get
supported
that?
by
Well, it has to do with risk
monetary
profile.
and fiscal
That's all.
policies will put upward pressure on inflation. Market-based indicators of longer-term inflation expectations have returned to their pre-pandemic levels, but still remain very subdued, while survey-based measures remain at low levels. This assessment is broadly reflected in the September 2020 ECB staff macroeconomic projections for the euro area, which foresees annual inflation at 0.3% in 2020, 1% in 2021, and 1.3% in 2022. Compared with the June 20 Eurosystem staff macroeconomic projections, the outlook for inflation is unchanged for 2020, has been revised up for 2021, and is unchanged for 2022. The unchanged projection for inflation in 2022 masks an upward revision to inflation excluding energy and food, in part reflecting the positive impact of the monetary and fiscal policies measures, which was largely offset by the revised path of energy prices. Turning to the monetary analysis, broad money growth continued to rise, reaching 10.2% in July 2020 after 9.2%
No broad money
in
jokes,
June.
okay? No broad money jokes.
Strong money growth reflects domestic credit creation and the ongoing asset purchases by the Eurosystem, as well as precautionary considerations which foster a heightened preference for liquidity in the money-holding sector. In this environment, the narrow monetary aggregate M1, encompassing the most liquid forms of money, continues to be the main contributor to broad money growth. Development in loans to the private sector continued to be shaped by the impact of the coronavirus on economic activity. Following strong increases in the early month of the pandemic, the annual growth rate of loans to the non-financial corporations remained broadly stable in July, standing at 7%, compared with 7.1% in June. High rates of corporate loan growth continue to mirror elevated liquidity needs of firms to finance their ongoing expenditures and working capital and to further build liquidity buffers, although the rebound in economic activity has resulted in some recovery in their revenues. The annual growth rate of loans to households also remained stable at 3% in July, the same rate as observed since April 2020. Growth in loans to the private sector continues to benefit from historically low bank lending rates.
Well, like one of the issues, Jeff,
Overall,
is when she's like,
our policy
despite the
measures,
trillions
together
of
with the
euros
measures
we've
adopted
spent to
by
create
national
inflation,
governments
we
and European
expect
institutions
future inflation to
will
remain
continue
negative.
to support access to financing,
What?
including for those most affected by the ramifications of the pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed.
But remember,
that an
guys,
ample degree of
and I've
monetary
explained the
accommodation
behavioral
is
finance
necessary
behind this
for the
so
robust
many times, but
convergence
let me
of
just give you
inflation
another thought
to levels
process.
that are below or
America
close to
is so
2% over the
ridiculously
medium term.
expensive because the Fed has
Regarding
forced us to
fiscal
buy the
policies,
stock market.
An ambitious and coordinated
So everything
fiscal
is
stance
way,
remains
way,
critical.
way, 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 way
view of a sharp
overbought. Tesla
contraction
is
in
up
the euro area economy.
300% this
Fiscal
year.
measures taken in response
So now
to
you
the
can buy
pandemic
Europe for
emergency
cheap. So people are
should,
like,
as much as possible, be
hey,
targeted
maybe
and
I should buy a
temporary in
German
nature.
company. Instead of Tesla, maybe I
three
should own some
safety nets
BMW because it's
endorsed
cheap.
by the European
Cheap, I
Council
tell you, cheap.
for workers,
You can get euros for
businesses,
cheap.
and
And therefore
for
the euro
sovereigns,
goes up.
amounting
Despite
to a
it
total
sucking,
of 540 billion
it goes up.
euros, provide important funding support in this context. The Governing Council also strongly welcomes the next generation EU package of 750 billion euros, which has the potential to significantly support the regions and sectors hardest hit by the pandemic, strengthen the single market, and build a lasting and prosperous
Ed says
recovery.
Audi. Well, if I'm a
In order
Nike
to
guy, so
fully
I
reach
drive
its
Mercedes and
potential,
BMW,
the
but if you
package
wear
will need to be
Adidas,
firmly
you drive an
rooted
Audi.
in sound structural policies, conceived and implemented at the national level.
Of course it's risk on, Raymond.
Well-designed
Absolutely.
structural policies could contribute
sure.
to a faster, stronger, and more uniform recovery from the crisis, thereby supporting the effectiveness of monetary policy in the euro area.
Do they still make Reeboks? I don't even
Targeted
know.
Policies are particularly important to revitalize our economies.
When Shaquille O'Neal couldn't sell Reeboks, I think that was the end of it.
Priority areas such as the green and digital transitions. We are now ready to take your questions.
Yeah!
Okay, the first question.
That was a beautiful and elegant speech. Thank you, Madam Lagarde.
Good afternoon. President Lagarde, your words indicate to me that the exchange rate was a topic of discussion in the Governing Council today. So could you give me a bit of detail about that discussion, and how concerned are you about the current level of the euro? Do you think this strength is justified, and how much does this affect policy? Second question is about
No!
is whether you
No! I don't think it's dovish.
Policy,
Europe is going to be cheap. Americans have nowhere else to put their money.
Change being discussed today.
That's bullish.
Thank you so much for your question. Yes, indeed. The Governing Council discuss the appreciation of the euro. But as you know, we do not target exchange rate. Our mandate is price stability. And clearly, to the extent that appreciation of the euro exercise negative pressure on prices, we have to monitor carefully such a matter.
By the way, just look at what I have drawn on the chart. I have the entry, I have the target. The question is, can we get through 19 that easy? And if we can get through 19, are we going to 1950?
Our programs. We, as always, look at how effective and efficient our policies are and our purchase programs have been. So when we look at the impact that a program like the pandemic emergency purchase program has been, we can only acknowledge the fact that it has been efficient and it has been effective. Whether you look at the sovereign yields across the euro area, whether you look at all indicators of fragmentation.
Mihai, what we're looking at now is volatility related to this live press conference. It's just volatility. The volatility will end when the press conference is over, and then whatever's going to happen will happen then. Typically, we don't have an event like this.
We also acknowledge the fact that PEP has also served.
Yeah, Raymond. Well, the long-term position is negative dollar.
Aspect of our monetary policy, but it did.
Remember, dollar weakness means dollars leaving the United States. Where is it going? Europe.
Policy, and certainly under current circumstances, it is very likely that the full envelope of PEP will.
It has to do with what economists call nearness.
Policies.
Okay, the next question comes from Isabella Bufacchi at Il Sole 24 Ore. Isabella.
Thank you for the
Bufacchi.
President Lagarde, I have two questions. The first is on PEP. The ECB does not fix the size of its net purchases programs in relation to the size of government bond issues. However, what you called the ambitious fiscal measures in response to coronavirus pandemic by the euro area member states will result this year and next year in a massive increase in debt. GDP levels adding pressure on
boy, fucky.
Are you and the Governing Council worried that public debt increases might jeopardize financial stability and provoke unwanted tightening, higher
Bufacchi me? No, Bufacchi you.
The markets expect the PEP to be increased, and what do you think about market expectations on that front? My second question is on banks. The take-up of the last TLTRO III tender was, as you said, very high, but it also showed a fragmented banking system and some weaknesses.
See how fun macroeconomics is?
Can increase fragmentation and weaknesses in banking, and so markets expect more to be done for banks, for example, softening the TLTRO III conditions. Is the Governing Council looking at that on European banks in pandemic and possible revision of existing rules or tools? Thank you.
Well, thank you very much for your many questions. Let me take the opportunity of your first question to first of all acknowledge and celebrate the fiscal measures that were taken. We had repeatedly over the course of time asked for fiscal measures to be taken and for fiscal policies to work hand in hand with monetary policy. This is clearly something that
please make sure you guys subscribe, like, and leave comments.
And at the European level. If you combine all the fiscal measures that were taken at national levels, you arrive at roughly a number
German
of
Copacabana says, so what is it going to happen? Euro up or down? Look at my chart.
Really have an impact on, on the outlook.
If you don't understand what I've done here,
to mention, the measures that were taken under the
I've drawn support lines,
which,
pivot lines, fib lines, moving average lines, price action pivot lines, which are standard deviations, right?
Not only
on top of explaining what's likely to happen to the euro and the dollar
in the summer to help both
you got to put this stuff together, man. It's all but done for you here.
540 billion euros.
I even have a target.
But it did really welcome strongly the breakthrough of the new generation EU fund.
What you're telling me, German,
150 billion euros,
and I'm just pointing you in the right direction. I'm not insulting you. But what you're telling me is you don't understand pivots, moving averages, and Fibonacci, for example. Like, look, it's clearly labeled in Fibonacci. Entry and target.
And I'm only
so if you're like, so does this mean it's going up or down?
Taken in due course, and
you need to learn, for example,
necessary waivers
Fibonacci
and exemptions that were required at the European level. Let me just add a few words about the program that we put in place.
So I just put it down like, okay, I need to go into Fibonacci. That's all. So no offense. Okay, we hit the psych level, guys. Psych level. Beep, 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 beep.
It was initially calibrated for 750 billion euros. That was
119. Oh, so nice.
And the dual function was the following. The first function was to stabilize market, to ensure a smooth transmission of our policy measures. The second function was to ease our monetary policy stance to help counter the substantial downgrade of our inflation outlook caused by the pandemic.
Need more coffee. I just had like 9 shots of espresso.
The PEP announcement already in March and its recalibration later on in June
psych level, guys. Psych.
Stalled the tightening in financial conditions and contributed to easing the overall monetary policy stance. And, clearly with markets stabilizing and risks of fragmentation subsidizing, I remind you that we are pretty much...
Oh, was I too harsh? I'm sorry, guys. I'm sorry if I was too harsh.
And dispersion of yields.
This is right. So then you need to ask more questions. Don't ask me like, does this mean up or down? Come on. Ask me intelligent questions like, what does this mean, or what does that mean, or why did you draw that?
And the role of the PEP in easing our monetary policy stance has taken a central
so just ask,
stage instead.
Ask.
So,
right? That's all. Because there's like 5 things drawn on here that should be very, 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 very clear what's going on. So if you don't know what's going on, ask me how you put the pieces together. I'm happy to help. I'm not here to bitch slap people.
To the needs at the time. And I would add that the TLTRO that you've referred to.
Yeah, and I apologize to German Copacabana. I love Germans. I love the Copacabana.
To make sure that the economy was receiving abundant liquidity in order not to accumulate liquidity, not to build buffers.
Should you be scared of the pullback off the 21? Well, if you entered, you're probably already, because it's a scalp, your stop's already at break even, so there should be no reason to be afraid.
A borrowing interest rate which can go down to -1%. It is only under the condition that the lending to the economy, corporate and households, is actually tantamount to what it was or more than what it was prior to COVID-19. And, TLTRO 3 is very different from TLTRO 1 and TLTRO 2 in terms of take-up. we've observed at the time of this massive take-up for the first operation, roughly 1 trillion and 300 billion euros. We've observed that it was very well spread throughout the euro area. So it wasn't.
All right, I got to
country-specific.
turn
It wasn't
the
a
audio
category of
down or
banks
something.
in
Let
a
me.
country.
How do I do
It
this?
was across the board.
Okay, can you still hear me?
Tells us that
So lots of questions, right? Like, why is she saying negative things, but the euro is going up? Well, I want you to think two things. First of all, it's behavioral finance. This has more to do with the United States of America than it does Europe. And we talked about this before it coming out. The euro was strong because of the United States, not because of the ECB.
I think published actually say that TLTROs
Right?
has helped them to lend to the economy.
Well, we'll handle German. Ask that question in a second. Let me finish my thought here, right? So she came out and said, despite all the awesome policies that the ECB has done, she still expects negative inflation. What does negative inflation mean?
Both in relation to PEP, in relation to continued
Strong euro.
asset purchase programs, otherwise, and in
So the euro is strong because she says she expects a strong euro.
tools as calibrated have worked well.
What's another way of saying deflation? You need less euros today to buy something than before.
Good afternoon, President Lagarde. My first question is about some recent comments by Philip Lane, in which he talked about a two-stage
Well,
approach to
no, well, yes and no, Dave. So we already know their quantitative easing policies.
pandemic.
But what she's also saying is no further, like, no more, like, how do you say more negative? There will not be more negative interest rates. Like, it won't become
About the Fed's recent strategy shift,
more negative. It's such a, I can't even say it. They will not go more negative on the rates. Yes, they might print, they are printing money, but we already know that.
U.S. labor market, paying more attention to
But she's also confirming
economy,
strong euro is creating a deflationary situation. So she's acknowledging strong euro. And this has everything to do with US dollar. This has everything to do with the Fed policies. And by the way, I explained all of this in January, February, March, April, May. Like, none of this is new, right? You have to understand there isn't something, like if your last guru said, that means bad means negative euro, that's not the right thought process. That's it's dangerously oversimplified. Okay? So this has more to do with relative. Remember, relative. Relative. The United States is, the investors, like we discussed yesterday, are forced to buy assets to the point where there's a ginormous bubble in the stock market.
It has a dual function.
Now, professional investors are required by their own mandates
Clearly, it will continue
to take some profit because they own so much Tesla dollar-wise, so much Apple dollar-wise, so much Netflix, so much Google, that they have to take some profit. Now they got this cash, and they can't really buy the same 10 stocks again because they're oversubscribed. So now they have this capital. Where do they deploy? Well, they get nothing in the bond market, and and they're probably not a real estate fund. So what do you do now? Well, Europe is cheap. Okay, so now what we're showing, like the euro dollar, forget about it like this being Europe and dollar. Forget about European economy, U.S. economy. Stop thinking about, well, COVID numbers here and COVID numbers there. Just look at this as a direction for flow of money. The euro dollar going up, the only thing it's telling you is that money is leaving the United States. And I explain this. If you go to the CIS, what is it? Something of International Settlements, a BIS, the Bureau of International Settlements. They show that if you look at your $5 trillion a day worth of turnover in the Forex market, 40% of it is euro dollar. I've explained this a million times, so write it down so I don't have to do it one more time. Just simply the dollar weakening will push the euro up. You have to understand that. This has nothing to do with Europe. Europe's doing everything they possibly can to create inflation, which means weaken the euro, so you have to spend more euros to buy something. And that's inflation. And then they can raise interest rates. But this isn't about Europe. This is not about Europe. This is not about the euro. The ECB is talking. Lagarde represents Europe. This is not the trade. This is the United States of America. And it's simply the Fed's policy pushing up, steamrolling over everything the ECB did. And that's what Lagarde is saying. They did all these programs, and they're going to continue doing these programs. They're not going to lower interest rates further because they're like, this has nothing to do with us. And lowering it negative more won't do anything because we've done all these policies to stabilize the economy. However, we expect negative inflation to continue. Turn that around. She's like, we've stabilized our economy. It's not the end of the world. We're getting through COVID. However, strong euro exists and is expected to continue existing. What she didn't say, it was that gall dang Jay Powell scumbag over at the Fed. You see? So what I've been telling you for months and months and months, and in particular at the end of April, when the Fed said, no, we will never do negative interest rates, at that exact moment I said, buy euro dollar. That's it. Dollar's done, and probably for the next 5 years. That's it. Done. But if your last guru's doing all these other things like, oh, well, that's bad, so therefore, down, they're not quite there. In fact, they might be at high school level economics, but they don't have a master's degree in economics, right? So there's a difference. You have to think beyond that. You have to have the behavioral finance background to maybe get it, right? And again, I'm talking over years. So now if it does this, and 2 days from now, we're actually lower, and you're going to say, Wayne, you're wrong. Well, I'm actually talking years in advance here. So what happens in the next 2 days, 4 days, irrelevant, right? But what I would expect is this. That's why I drew it for you. Okay? Right? Look at me drawing. Okay? Support. We breached resistance, so this is support. We made it through here, so this is support. Look, it came down, bounced right off of it. Now we're up here. This should be support. Not necessarily. It could do this, right? Because now it's just reacting to her wow, blah, blah, blah. Your customer says, why does strong euro mean weak inflation? Okay, let's do this. Let's pick on a cuckoo clock. Is it cuckoo with a K? Cuckoo? Or a C? Cuckoo, right? Cuckoo. Cuckoo clock. Okay? So, in 2005, the European economy was on fire. And a cuckoo clock cost, how do you do euro? 350 euro. It's a nice one. Okay. How you say this? Now, how should I do this? No, this isn't going right. Let me think. Because I'm doing this exchange rate. That's not right. I'm thinking of it as a foreigner. If the value, okay, let's do it differently. it's still in terms of cuckoo clocks. I don't want to do cuckoo. Okay. If let's try it a different attack and see if it works. If the euro goes up, the euro, right? The euro buys more. Okay. Okay. So if euro goes up by 10%, let's see that. If euro goes up 10%, then you used to be able to buy something for €1. And that's okay. You used to buy something for €1, but now you can buy it for 0.90 euro. You see what I mean? So it used to be €1 to buy, let's say, a Coke, but now you can buy a Coke for 0.9, and it's not percent. What am I doing? Can't think, right? It used to cost €1. Now it costs 0.9 euro. So prices went down because the purchasing power of a euro went up. You see what I mean now? You're a customer, are you following me? So euro dollar going up pushes the price of euro, prices in euro down. So purchasing power, so you do this. Google purchasing power parity. Okay? And in euro terms, you need less euros. As the purchasing power goes up, you need less to buy the same. So prices fall, but the purchasing power per euro went up. And when prices fall, what do we call that? When prices fall, we call that deflation. Okay, when prices rise, we call that inflation, right? So what's happening right now is money is flowing from the United States to Europe, pushing up the value of the euro, pushing down the value of the dollar. So a European buying an American product, for example, needs less euros. The price in euros fell. Okay? Now, here's another consequence. I can't imagine this happening, but there's a German, and this German wants to buy a new vehicle, and he's like, well, I got Mercedes, BMW, and Audi, but I can get a Ford for cheap. So he goes to the Ford dealership and says, hey, can I have a Ford? Right? Actually, Europe is bigger than the United States. Oh, is that right? Yeah. Olin, Germans buy Fords?
To make sure that operators, whether they are families or enterprises, can actually have access to credit and can participate in the recovery of the economy. Second,
I don't think I've ever seen a German drive a Ford.
our various purchase programs, as you know, we have an allocation that is dedicated to
Or how about like a Chevy? Have you ever seen a German drive a Corvette? Probably not.
commission, either
Although the new Corvettes are awesome.
entities of its choice.
Have you ever seen an Italian drive a Corvette? Maybe third generation. All right, up. Okay, we're tickling through the psych level now. Very nice. Very nice. Renaults, is that right?
instruments that were decided. Thank you.
Well, that's the funny thing, right? So that you do that in marketing classes where you create a grid and you know there's like price and quality or something, right? And you put all the cars and like Fords are cheap, Mercedes are expensive, but Fords are generally, let's say, pretty decent in quality, not amazing, but for the price. And then maybe Mercedes is very high in price and it's good in prestige, but it's always in the shop. Why? Because there's 20,000 little gadgets. You ever seen a Mercedes? How many buttons are in a Mercedes? They love buttons. Come on. And every button breaks. I used to spend $1. So I didn't have a Mercedes. I had an AMG, like a pure 100% AMG car. And my AMG, I added it up and I spent more than $1 per mile in maintenance. My wife's like, I hate that car. It sounds like a motorboat. No, it's not, rookie. Okay? Your neighbor with a Mercedes, and he's like, look, I got, and it says it's an AMG on the back, and he's got AMG wheels and a steering wheel and seats. It's not an AMG, bro. It's got AMG wheels. He paid way too much. No, my car was made in the AMG factory. It was cool. The only thing Mercedes on it was the frame and the body, probably. But even then, it had the AMG kit. But it was 100% Mercedes, right? But I sold that years ago. But it was finicky because it was, a handmade car. Anyways. Like the worst car ever is like a Lamborghini. You get in it and you're like, this is a $300,000 car. And you're like, the mirrors rattle.
Brexit, I think, for quite a while has been included as one of the...
Yeah, Olin's like, yes, next time you go to Germany, rent a Ford, probably, right?
And that is included in our...
Well, that's the thing. No, there you can get a full AMG car.
The negotiations are handled very ably.
Most people don't have them.
Michel Barnier, under the mandate that was assigned to him
Most
by
people
the
don't have
European Council. We are carefully monitoring as well the developments. We very much hope that after the Brexit that was decided and became effective as of January 1st, 2020, the outcome of the negotiations, notwithstanding the negotiation posturing and what has been observed in the last few days.
Is that the Ford though, Gordon?
The outcome.
Isn't that when Ford owned it?
The projected downside risk that we have included in our projection will not be made worse. Thank you.
And the next question is from Tom Fairless at Wall Street Journal.
I think so. I think that's when they owned them. They owned them for like 3 years. And they're probably some of the better, right? They're actually some of the better Jaguars, I think. Sorry, Jaguar. All right, let me turn these questions back up.
Is worrying most members. And
is that right, Joseph? I thought they were a little better. Because before Ford owned them, if you owned a Jaguar, like none of the electronics would work.
On the PEP, and how that would be the main tool if you needed to provide more stimulus. But could an interest rate cut be helpful? I think investors are pricing a small interest rate cut. Do you think that
NP, if M2 is down, it's because the money has been used to purchase stuff, right?
No, as I said, the European Central Bank does not target...
It's not in your savings account anymore.
Exchange rate.
You own a stock in your retirement account.
Is price stability. And to that end, we have a medium-term inflation aim, which we try to pursue using all the monetary policy tools that are available. It is clear that we are currently observing through the analysis that we do we are observing negative pressure on the price level, and that is partly attributable, largely attributable actually, to the appreciation of the euro. So
Yeah,
while we
Toyotas
don't
are great.
target, any level, and I have not, do not, and will not.
All right, we're
target
whipping out
any
again at the psych level.
We are also monitoring carefully.
Oh,
the
come on,
appreciation
Lagarde,
of
say
the
something
currency
good. Tell us how bad it is in Europe.
relation to its impact on
Dude, it
our
must suck
inflation
saying
medium-term
everything
level.
we've been doing is good
On
and
your,
it's
other
working,
question,
except
let me take
we
this
have no
opportunity,
results.
To remind you that
Right on, Joe. That's right.
if and when necessary,
Joe's the boss.
and warranted
Love
by
that.
circumstances,
Good for you, man.
and in accordance with our mandate, the Governing Council is determined to use.
So remember tonight, guys, in the live group at fxbootcamp.com, we will be planning
deploy them
next
and
week's
calibrate
trades.
them as necessary and as appropriate in order to deliver on our mandate. And that applies to all our policy tools. So I did mention the particular impact of PEP because that is the most recent development that we've had, recalibrated back in June. I did refer to the APP and to the targeted long-term refinancing operations because they were also the latest one. But it doesn't mean to say that I'm excluding all the other tools that we have available. And indeed, if and when it was needed, we will not hesitate to use the tools as appropriately and as adequately as is needed. There are circumstances under which asset purchase programs are more efficient in order to reach our goals. There are circumstances where interest rates are more efficient. We have considered.
Here's
for the
where
last
we
few months that the
just yesterday, I made a big deal about this. If you remember, we drew the price action pivot points. I'm like, when, right? Are you going to buy it? What's your plan for tomorrow? Do you remember all that? It was a big deal. We spent a lot of time on this.
Two questions, if I may.
Here we are now.
It's very likely that the full envelope of the PAPP will be used, even with the rebound on the economic activity. Do you think
So
that
here's
there
one
will
at
probably be
71.50 and we're at
another increase on its
73.
volume before the end of the year?
Here's another one at
And my second
71.70 and we're at
question,
73.
about the Spanish banking merger that involves CaixaBank and Bankia.
Okay. I
would
should
like
be
to know
in
your
here at
opinion about it
72
and whether this was the kind
and
of
be at 73.
concentration that the ECB was
So unfortunately, there's only
looking for,
300
or is
pips.
this
I could be
another
up at
lost
400 if I had
opportunity
done
for
it,
a
but
transnational operation? Thank
it's
you very
up to
much.
you. I'm not putting you into
Well,
trades.
thank you so much. Let me tell you that we have not discussed any.
So I'm really
expansion
hoping
of the
this
envelope
M3,
of PEP,
or,
and you're giving
sorry,
me a
M2
very nice
holds
opportunity
all
to
week
hand
long.
the floor over to my colleague, Vice President de Guindos, because your question clearly relates to a topic that he's even more familiar than I am about.
Take care, Joey.
Well, thank you very much, President. As you are fully aware, we do not enter into any kind of assessment or evaluation of concrete operations. What we have made is a generic recommendation based on financial stability considerations. And one of the main vulnerabilities that we have indicated in the past and most prominently after the pandemic is the low profitability of the European banks and the low valuations that this low profitability is given rise to. So consolidation is one of the instruments. It's a generic call, a generic recommendation, as I have said before, in order to improve the profitability of the European banks, to get rid of excess capacity.
Cool. If you guys have
and to
questions,
reduce the
continue to
cost
ask.
structure of the European banks, but we do not have any sort of
Dollar down, neutral, dollar down, just perfect. Look, right off the M2 again.
Okay,
These are
thank you.
lots
The
of
next
really cool
question comes
trades.
from Annalisa Piras of Taglicht Media.
Good afternoon, Madam President. I would like to know.
Remember when I drew this?
What do you believe is today missing?
See the
in
high?
architecture
So you
of
got the
currency
support now?
union? And the second question, what do you believe?
Look at
will
today's
take
entry,
in the
actually.
next 5 years to have a fully.
Look at today's
profitable
bullish entry.
euro
Can you
area?
see it? Look at.
I think we have,
On the first 5 minutes of the
said
day,
for a long
you got
time
the
that
exact
currency
price.
union to be more complete
Look at that,
and,
guys.
its architecture,
Exact day
designed
trading
to the
price.
full possible extent.
And I have it
We would
only
like to
set
see
for
a
bulls.
fully developed banking union with all its attributes.
So,
So that
right?
there is, you know,
Only
a
set for
euro area
bulls.
banking system
Beautiful,
with,
huh? Look at this.
easy cross-border mechanism, with resolution mechanisms, with backstop facility in place, and with much more solid principles of a union than we have. Second, I think we've also consistently indicated that we would like to see a capital market union, which would apply throughout the euro area at least, and that would
These are
facilitate
nowhere near
access
monthly
to
targets.
capital by enterprises and large corporates without the discrepancies.
I use
the,
MT4, it's just I'm old
different,
school.
regulatory regimes and
Yeah,
final
Marina.
requirements that
Yeah,
come
Marina's
apply
right.
in order to
Gold
make sure
is
that
another one that
money
we have
actually
set that
flows
way
to where
too.
it is needed in order to finance investment.
Commodities.
I think we clearly also are
here it is.
pleased to see that there is at least embryonic.
Okay. But see what's happened? Like it doesn't seem to quite fit. Let me turn her down again.
Facilitate convergence and
Okay. So we had the bounce, right? And then we got the bounce. So I did the fibs for you. I think I had guessed on the 618. I don't think it had hit yet. 618 to 1382 is what I was saying. I think we were still here when I was doing it, guys. So I said, well, you look at the fib, you look at the roll reversal, somewhere between the 382 and 618. So I drew it off as 618. 618 predicts a 1382, by the way. It's in the book, it's in the training course. 618 does not predict 1618. 618 predicts 1382. And you'll say, well, Wayne, you're wrong. Well, actually, if you look at it, because we were here and I was guessing here at the time, I'm predicting this top and the consolidation and up. So what I'm actually doing here is I'm saying this price is a buy after there's an exhaustion. Okay? Look at this. 4 hours, 4 hours, 4 hours, 4 hours, 4 hours, 4 hours. I think that would be the exhaustion. So the roll reversal, instead of happening next week, it happened this week. And now we're up to the next level. Okay? And now you keep moving. But none of this says sell.
Thank you very much.
You understand that? And I think we were discussing that at 1900. You know, that there's no sell. There's no plausible sell. There's no way for a sell. So if you're a bull, how do you put it together? Well, you want to see the rejection of 19. You want to see the higher high. You want to see the higher low. You want to see the higher high. You want to see the higher low. You want to see the higher high. Now, right, let's do it this way. You don't know exactly how it's going to happen, but you know what you're looking for. Okay? And now, using technical analysis on smaller time frames, you're trying to overlap what you expect to what is actually happening. You understand that? How do you draw the rectangle? There's the slow way and the fast way. Slow way, is insert, shapes, rectangle. Or you add it to your toolbar. I think it's under line studies. Might be under line studies. Oops, yeah. Didn't mean to do that. What I meant to do was customize. You have to do the right one. So I got it. So under customizing toolbar, under the section of line studies, what you can do is, for you, it'd probably be over here. So what you need to do is look for it on this side, click rectangle, and put insert onto the toolbar, and then put it there. See, remove, it's gone. Insert, add. Oop, I did triangle. So remove triangle, so the triangle's here, I don't want it. Remove triangle, so click remove. Add the rectangle, insert, Okay, and if I wanted ellipse right there, I can say, put the ellipse on the bar, and there it is. And now I can do things like, okay. But do you see, guys? We know the price action that we are expecting. We know the higher high and higher low, but we don't know when, right? We know the price we want, but we don't know the when. So at that time when we're up here and I drew the bounce off of support with the higher high, what I'm expecting is to buy somewhere between 1927 and 1920. We don't know when, but we know the prices. In fact, in the training course, I call this the sweet spot. So now your job is when. And you'll see that this is probably a London Open, so it's not even that surprising. But to understand what you want to do here is very, very easy. And this is probably when you drop into day trading. And you also know, after it makes a new higher high, and I teach this in the price action course, that you expect a higher low. And so you start doing your analysis, right? You could do Fibonacci again. You could study from here to here or here to here. That's a judgment call. The other thing you do is you look at for roll reversals. The other thing is you look at price psych levels. So 50 would be too high, most likely. And whatever, you do all your analysis. And then you can look at next week's pivots. All of this, like all of it's valid. That's your alpha, your ability to make decisions. And you might use the same tools. You might do different tools. You might make similar decisions. You might make different decisions. That's you, right? So anyways, when you're at a higher high and you're a bull, especially at a bounce on support, higher high, higher low, and now you're at a new higher high, what are you expecting next? A higher low. So it could be a fib, it could be a roll reversal, it could be a psych level, it could be a pivot point. These are all levels of support, but all you know is a higher high after a higher low, you're expecting a new higher low, and you use any tool or all the tools you possibly can to try to guess, which we call an educated guess, on where that new level of support will be in the future. Okay? And so one of the things I used was the next period pivot points. And this is a buy zone. I already know it's a buy zone. What else is in here? Well, there's all kinds of used to be resistance is now support. You see that? So what I had done for you is between yesterday and next week, there'll be a buy. Okay? I guess the ECB press conference is over. Do you guys see that now? Thank you, gold. But you know, ultimately, I'll tell you the most important thing is knowing not to sell. I think I think trading is quite, I won't say easy, but let's say let's say reasonably straightforward if you know your bias and you recognize a trend. Oh no, YouTube's going to start a new thing. How do I get rid of that? There it is. ECB, I can get rid of her now. Cool, and I'm back. All right. I think if you have a bias and you analyze your charts for trend, trading the trend in the direction of your bias is pretty straightforward. Okay, you don't have to be a rocket surgeon. But it's most important to know when to not trade, because market conditions are not favorable. And over this giant crash period we had for a few days, I taught you how to be strong and focused on your bias, focused on confirmation of your fundamentals and of your understanding of seasonality, instead of me freaking out and saying, look at all these positions going against our bias. Instead, find your prices. You guys remember that? And I said, you have plan A and then plan B, maybe even a plan C. Would you buy it at 19? Would you buy it at 18? Would you buy it at 17? And if so, you wait, and you wait, and you wait, and you wait for your aha moment. And of course, your aha moment would be a ginormous bullish engulfing candle right off of a psych level, which is obviously support. It's also M2. Like, dude, seriously, right? That's what you should be thinking. Like, this is the M2. This is support. This is a psych level. And I see a huge, giant, bullish engulfing candle. What do I do next? You buy the dip, son. Right? You should be a game on mode for you buy this dip. You buy the next dip, which I had guessed would be around this 1940 area. And then now it's a new higher high. So what are you going to do? Buy the next dip and buy the next dip and buy the next dip and buy the next dip until it makes a lower low. Then full stop. Okay? Yeah, Peter's getting a good price. Peter, at that time, wasn't there a whole bunch of people that were like saying 1869 or something? And I'm like, 1869? And I'm like, I can't find it. Like, what are you doing? Right? I'm like, I see 1940. 1914. I get the 1914 thing, but how do you get the 1869? I'm like, it might be there, I guess. I don't really see it. Okay? But now that you reminded me of that, this is non-farm payrolls, right? So here's the follow-up. Snap. Okay? Okay? So what you do is you keep buying dips until it makes a lower low. And then when it makes a lower low, you say, that's not what I like. And you stop. Okay? And you'll probably go right back to this 1950. So it might make its up to 2000, right? Or close to it. Then it'll come all the way back to 1950 and then maybe go back up again. But you have to have a committed bias. Otherwise, you're never sure what market conditions you want to trade in. Even if you're a day trader, intraday trader, and scalper. Okay? It's important to know the market conditions because you can temper your aggression, or let's say taper or temper, or that's not even right. Tune. How about this? You can tune your aggression based on market conditions because you should still know if you think market conditions are short-term, medium-term, or long-term. I know many of you focus on intraday trading. I love intraday trading. I love it. I did it for years and years and years and years. Love it. Right? Every Asian session, every London session, every New York session, been there, done that, love it. But you still need to know when you're full throttle or half your foot on the pedal. Or one foot on the pedal, 1 foot on the brake. You guys know how to race a car? Yeah, 1 foot on the pedal, 1 foot on the brake. Or a true race car driver, 1 foot on the pedal, the same foot on the brake. And you're fluttering both, gas brake, beep, 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 beep. You're just, right? So you need to know, you need to have sort of the right tude. You have to have the right attitude for the market conditions. If you're racing, you should know, is it hot and dry? Is it cold? Is it wet? Is it a little bit wet? Is it foggy? Is there dew? Are the mornings cool and moist and the afternoons hot and dry? And you need to adapt and have strategies to adapt as you go along, right? Pundit asked a question about the dollar index. Let me answer that question next. The dollar index is a form of relative strength. So I don't have Dixie on this platform, but I have a form of Dixie on this platform. Okay? There it is. This is one that I've made through an algorithm. This is US dollar versus everything. Okay? Cool. So could I trade that dollar index? Yes. In fact, if you want to take what I teach you and you want to become a professional trader and the only thing you trade is dollar index, I'm all for that. Right? A chapter in my book is dedicated to that idea. In fact, it's called the Greenback Guru. So you could just say, all I trade is the dollar index. Yes, you could do it. With all the same methodology, the same ideas, yes. Now, what I do is I say, okay, well, dollar is weak. Okay, great. And of course, fundamentally and seasonality based, I would assume such a thing, but it doesn't matter. I don't have to. I can look at that and just say lower lows. Okay? Bearish. So I take it one step further and I try to specialize because bearish in general I get, but what about euro dollar? Euro is strong, dollar index is weak, so euro dollar will go up faster than dollar will go down. Usually, not necessarily, but probably. Okay? You see what I mean? So what I would rather you do is say, all right, I see dollar weakness, and then you, from that, you either build a portfolio and essentially build your own index, but you're specializing in the index. Right now, the pound is very, very weak, right? So if you're specializing in a weak dollar index, you probably don't want to buy pound, but you might be into the commodity pairs and you might be in euro over the pound. Okay? Okay? Right now, it looks like the London boys are moving their money to Switzerland as fast as they can. That's what it looks like to me. Okay? This is in the complete toolkit at metatraders.com. It does not work on ECN accounts. I don't know why. It just, ECN accounts are the ones with the little I after the currency pair, and that screws this up, and so I don't know. Am I day trading work 100% on the dollar index? Yeah, because remember, there's nothing special. There's nothing special or unique or even really proprietary about what I do. You have to remember, I started at zero. When I first became a currency trader, I started at zero. Never traded anything in my entire life. Nothing. Okay? The only thing I ever bought to invest in at that age was a house, right? Because I lived in it. I owned Apple stock. I owned Cisco Systems stock. And I bought 2 bottles of wine for investment. That's the only thing I had ever invested in before. I was a venture capitalist, so buying stock was stupid, right? So anyways, I had to teach myself everything. Like, I literally knew nothing. Yeah, I still have one of them. And it became it's now considered the first cult cab of Napa Valley. The other one was a white wine, and some dumb biatch at a party opened it up warm and said, "This Chardonnay is nasty," and just left it on the counter and walked away. And I'm like, you went into my wine cabinet and oh my God. So I threw her off the balcony. At least I wanted to. But that one was on the, it was Wine of the Year. That one won Spectator Magazine Wine of the Year. Anyways, whatever. And I still have scars. That's why. But what I'm saying is I knew absolutely nothing. So, Morena says, oh, so the day trading template works on the dollar index as well. Yeah, because I had to figure it out myself. There's nothing complicated in what I do. Right? There's no genius except maybe the simplicity, if you want to call it that, right? Right? Right. And that's the thing too, right, Morena? Like at the end of the day, you have to know price action and you have to know support and resistance. Right? That's all you need. And I don't really care how you get there, but price action and support and resistance. Because price action is how price behaves. Okay? And there's multiple components of that. There's buying dips and selling rallies, but there's also like what happens when it gets too far from the let's say the 200 EMA. What happens when it becomes too overbought or too oversold? There's a behavior to that. And then that's what Elliott Wave noticed. Mr. Wave said, oh my God, look at that. After five waves, there's a 3-wave correction. Okay, well, that's still price action, right? And then Leonardo Fibonacci said, oh my God, look at that. Well, after, 1618, there's a 382. And after a 382, there's a 1618. And then it slows down. And someone else said, oh, well, there's harmonics to that, right? And everyone's kind of doing the same thing. But then after a while, it seems like it gets too complicated. What do you mean harmonics? And what do you mean you have to have a 17-degree angle on the apex after what the hell is that crap? But you could do it, right? Yeah, GAN fans and stuff, but they're all different interpretations of the exact same thing. I'm not that bright. I'm not that smart. I'm a hard worker though. Okay? I mean, I'm fabulously good looking and I'm a super hard worker. But the best thing about me is my modesty. Right? So I did it more simple. And I looked at it and say, okay, price behaves in a certain fashion under certain circumstances, and I need to learn this. So I taught myself that. How? Through 10,000 hours of observation, not through reading books, because I started trading Forex before Forex books were written. Like, really, think about that. Crazy, right? So I looked at all of that. Then the next thing is I'm like, well, that's interesting because there are also places where price action changes its behavior, and that tends to be at common prices, and that's actually support and resistance. So I started looking at that, and I use multiple different forms of support and resistance, the same way I look at multiple forms of price action, and I put them together. Like if you notice in the training courses and the books and the videos and all that I've done over the years, I separate market from price. That's all I've ever done. My entire Forex trading career. As I say, look, there's a general move, there's a general direction, there's a general sentiment. The markets are bullish, the markets are bearish. Is the stock market bullish or bearish? You're like, well, it was bullish the last 3 days, but it's been bullish for 8 years, 12 years. Okay, well, it's bullish, right? Whatever. And then inside of that, there's what price is doing now in the moment, like a momentum idea. Oh, well, in the moment. So price, action, market forces. So I separate those two. And the same way in the support and resistance category, over years and years and years of trying everything and keeping, rejecting most theories and keeping stuff I've proven work, I've found pivot points can also represent support and resistance of market conditions, and then I look at things for support, pivot points for price conditions. And then what I like about it is then you say, instead of making it a lagging indicator, which they are, I will like to use leading indicators. So price action is a leading indicator because I know after a higher high, like I showed you on gold, after a higher high, it will make a higher low and I'll buy it or I won't. But the higher high predicts the higher low. I don't care about the higher high except it sets up a new trade, which could be 12 hours from now. So I'm like, oh, I guess tomorrow I'm buying the dip. That's the brilliance. Oh, look at that. I see something. Therefore, that dictates what I'm going to do in the future. Leading indicator. Tomorrow, next period, next week, next month. That's it. Right? Price action is right with some idea of market forces. That's all you need. And I don't really care about things like inverse head and shoulders. Like, I don't care. Okay? Even the dude that wrote the $300 book about all the different candlestick patterns that he found through researching Japanese trading over 100 years, and he had it all translated to English, and now he's got this book. There's hundreds of patterns. The only thing that matters is if the pattern happens at support and resistance, which kind of says, even if you don't know any pattern, you know zero patterns. But the one thing you can do is say, okay, I'm in a bullish scenario and I buy at support. Then it doesn't even matter what pattern it is, because whatever pattern was supposed to put you long has to happen at support. So there could be 19 different patterns that put you at support, or you could just buy it at support because you were smart enough to say, the market's bullish, I'm buying a dip at support. You don't need the 19 patterns. You don't have to sit there and say, which pattern is it? You don't have to sit there and say, oh, it's the magic doji. Look at just buy it. And if your trend is correct, because it's trending by definition, higher highs and higher lows, more likely you will make money. The only way if you bought a good dip in an uptrend, the only way to lose money is for it to make a lower low, which means you were wrong on the trend. There's like one scenario you don't succeed. The whole dang thing reversed. So then you throw in the pivot point stuff and you're like, oh, it reversed because that's exactly where bulls would exit, or it reversed because that's exactly where bears would exit. Now it comes together and you have this moment. You're like, oh, I get it. Right? I get it. I understand what bulls would do now in market conditions like this. And I also understand what bears would do in market conditions like this. And all I need is price action and pivot points. Price action is price, pivot points is market. What happened in the last period? That's the market. Put them together, and what do you have? A decent chance. Okay? Back-end broker tools, are they useful? The only one I have, I don't know actually how to use. I have it though, and you guys can have it too if you want it. What am I doing here? Talk to me, Goose. Yeah, this one. Oh, I don't have it installed because this is a new computer. I don't have it installed. But there's like price ladders and stuff. I don't really understand how to use them. You got to remember, I'm not that complicated. I look at this and I say, okay, it's bearish. Okay? That's how I look at it. So, because I'm not a rocket surgeon, I just kind of like say, well, if it goes up there, I might look to sell it. Okay? Yeah, the three pregnant nuns are a good pattern. The three naked nuns is a good pattern. There's the garbage is gone and the dog's pregnant strategy. But anyways. Okay. So anyways, I hope, if anything, that my message to you is received this way. Complicated strategies are not necessary. In fact, they're probably dangerous. And that you can do this if you're focused on the future, the next trade, the next scenario. Okay? That if you see a giant red candle now, you should have sold it here. Off the 21, off the central pivot, off of all this because you had a bias and a plan. Now that it's moving, the worst thing you could possibly do is chase it and sell now. I will tell you, on the long run, you will lose money. In fact, on the short run, you will probably lose money. So now the next thing, okay, if you've been trading for 15 years and you're trading it candle per candle and all that kind of stuff, look, you're more experienced than the people I'm talking about. If I'm talking to someone that's been trading the market for a couple of years, a year or 2 years or less, 3 years or less, they're not ready for that, right? So what you should be focused is saying, okay, what are these market conditions and what will happen in the near term? Like what will happen later today after the London close? What will happen tomorrow on the new day? What will happen the rest of the week? What will happen next week? Where are we in September? And what does that mean for the rest of the month and next month? Where does September fit in the season between now and the end of the year? Right? This is what I want people focused on. And I fear that people are stuck on this one candle. Okay? And the one candle, in my humble opinion, if you traded that, you're getting paid. Now, notice you had to wait hours and hours and hours and hours. And then New York opened, paid. And guess what they're going to do soon? If they're intraday traders, they're stuffing their profits in their pocket and selling you their old position because you're slow as molasses on a cold Georgia morning. Someone was smart and intelligent and well prepared. They entered a trade here, and now you're like, I want in that trade too. And they're like, you can have mine, brother. And you buy them out, and your money goes into their net worth. Okay? It's like buying a brand new Jaguar, driving it for 8 years, and selling it to somebody else. They're like, that's a good looking car. You're like, yeah, it looks good. Right? Yeah, it is a good looking car. Would you like to buy it? I take cash. Is it any good? It's comfortable. So anyways, guys, I love you, babe, but I got to jump. It was real. Thank you for being a subscriber of Forex.Today. Yeah. So, thank you for hanging and watching the ECB with me. Thank you for being a subscriber. Thank you for the likes. Thank you for the comments. Thank you for leaving comments on the videos. Thank you for joining the FX Bootcamp training courses, the FX Bootcamp live trading group, which meets tonight to create next week's trades. Okay? Thank you for everything that you do, your seriousness, your professionalism. Thank you for being a client to Traders Way. Thank you, Traders Way. So, have a wonderful rest of the day, and I'll see you tonight if you're in the group. Thank you for everything you do. Oh, and I'd like to thank the person that heckled me today. He asked for me to cancel his membership, so I gave him a prorated refund of 28 cents. Now, I did the calculation. That's exactly what I owed him, and he laughed at me and thought I was stupid. But I'd like to thank that former member because I am ridiculous. I do pay you back your 28 cents if it's required, if it's necessary. I know it's ridiculous. It didn't have to do it, but there you go. How cool is that, huh? Somebody laughing at me for that. But that's what happens when you're ridiculous. I'm that ridiculous. That's what I owed him, 28 cents. Have a wonderful day. Yeehaw!